Hello, everybody. Welcome to the seminar today. Thank you very much for joining. I hope you're keeping well at home. I imagine it's quite a surreal time to be doing this. I can still remember doing some of the live ones, which feels like a decade ago now. But they were truly really fantastic events, and a massive thank you to the Landlord Investment Show for allowing us to partake today. And thank you for all of you out there for coming and joining us. Hopefully we'll be able to actually get to meet you at some of the other events later this year and into 2022 when we return back to some semblance of normality. But I'm here today from GetGround, and we'll be basically discussing everything limited company with regards to buy-to-let. And so obviously it's been a very hot topic across the last few years, and with good reason. And we're going to delve into that and help understand a little bit more about it, where the advantages lie, how to access those, and where we as a company GetGround can assist there. So to give some background first of all on who I am. So my name's Liam. I'm one of the key account managers at GetGround. And GetGround is a specialist in everything limited company, essentially. So limited company setup, limited company management, but most important, limited company education. And so we've essentially created a technology platform where we can allow investors to take the buy-to-let route via the limited company route very, very simply. And so what we do is we essentially educate all investors on all matters related to limited companies. So we'll be advancing a lot on this in the discussion today. And then our actual service provision is that we set up and structure a limited company for you through the platform. We coordinate with your solicitors to assist with any purchases going forwards. We provide a company financial account, so for all mortgage payments and rental incomes and everything else like that. And then we do everything required to manage your company on an ongoing basis. That's all accountancy, tax filing, bookkeeping, registered office, secretarial services, everything under one roof, essentially. And so we provide a turnkey and online solution to taking the limited company route. To give you a bit of background on who we are as a company, we are first and foremost, sort of our proudest claim, I suppose, is that we are partially funded by the UK government through HM Land Registry and through the Geovation programme. We're also regulated in part by the Financial Conduct Authority for certain activities. And we are also the recognised supplier for the NRLA, so the National Residential Landlords Association for Limited Companies. Beyond that, we're also registered with the ICO, Companies House, and HMRC for AML supervision. So that's just to give you a bit of a background on who we are and what our story is, I suppose. I suppose the best place to start is to get some context of the limited company state of play, as it were. And so limited companies as a vehicle for investments have been used for a long time by investors. However, it's only really in the last 5 years or so that that usage has turned mainstream. So in the past, sort of very savvy and sort of quite high-end investors would quite often use limited company setups for particular reasons. But ever since 2015, it's become significantly less profitable to be a landlord in your personal capacity. So there's been a number of regulatory changes by the UK government that has caused this, essentially. So the imposition of Section 24, which I'm sure many of you are aware of, various stamp duties, and other, I suppose, penalties for owning in your personal capacity. And what that's led investors to do is to shift across their ownership to these limited company structures. And to give you an idea of how popular a route for investing this has become, I've just got a graph here showing you that in 2018, 25,000 limited companies were set up in the UK with the express purpose of purchasing investment property with. Last year, that was 42,000. So it's a significant increase just in that 2-year period alone. And this year, that increase is supposed to be even higher again. And so that means that there's over 250,000 limited companies now in the UK that exist purely for holding investment property. So it's very much become the mainstream approach that many investors are taking, and with good reason as well. And the reasons for that is that limited company ownership has always been a very beneficial vehicle for owning investment property. And there's a number of reasons for this, and I'll advance on each of these points in separate slides, but this is just an overview here. And the big one is that there are a whole host of tax efficiencies associated with limited company ownership. And this is the one typically most people are interested in. To give you an idea of just how significant that can be, we've got a professionally audited tax example here across a 5-year period showing just how significant that increase can be. Now, if you would like an actual breakdown of this, please don't hesitate to contact me after. I'll be able to send you the full workings and assumptions of that after, and so you can understand it properly. But that illustrates just how significant that can be. But we also take a very holistic view to limited company ownership, and people often focus purely on the tax efficiencies, and understandably so, they are significant. But it's also important to understand where else the benefits lie. And the reason people historically use limited companies is to protect their personal liability. And so I'll advance on that in another slide, but that in the past was kind of the principal reason people were interested in doing so. You can also very easily buy and sell with others when using limited company structures. And you have access to improved estate and inheritance planning when you use them. They're very useful in terms of succession planning and mitigating inheritance tax and things like that. And now there's also very well-developed mortgage markets for this, which we'll get to grips with later on. So I suppose that the thing that most of you are probably most interested in is the tax efficiency. So where are the tax benefits here? What's going to be in my account at the end of this entire investment? And understandably so. And so here I've just got a chart just describing the differences between your personal ownership in terms of tax and your company ownership in terms of tax. And so the best way to view this is from purchase to ownership to sale. And so if we start with purchase, the first thing to address is that there's a very common misconception that when you use a limited company vehicle to invest in property, that you pay higher entry taxes, such as higher stamp duties and other associated costs. When the reality is actually that they're the exact same as they would be in personal ownership if you intend to rent out your property to third parties. So there's no difference there on ownership. It's the exact same as it would be in personal ownership. The real differences, however, come when you actually own the property. And the first one that I'm sure many of you are aware of is that you can deduct your entire mortgage interest from your UK tax bill when you use a limited company. So the best way to envisage this is, let's say you have £2,000 of rental income and you have £600 of mortgage interest. When you use a limited company, you can deduct that full £600 from your UK tax bill. And so you would only be paying tax on £1,400. You can no longer do this in personal ownership. And so that's been replaced by what's called a basic rate credit. And most of you will have heard of Section 24, and that's what this affects here. And Section 24 has been phased in across the last 5 years or so, up until 2020, and now it's fully phased in. Now, the secondary element of ownership is that you pay corporation tax on your rental profits rather than income tax. Now, the great thing about corporation tax in the UK is that corporation tax rate is lower than any rate of income tax in the UK currently. And income tax, which is applicable to all your rental income when you own your personal capacity, can be as high as 45%. And so essentially, if you take that £2,000 again that we started off with, you would deduct your full £600 mortgage interest, and then obviously any other expenses, but for the purpose of the example, we'll just assume it's the mortgage interest. And then you're paying corporation tax on that amount. So the way to view this is that you're paying a lower rate of tax on a smaller pot of taxable money when you're using a limited company. Now comes the question of, well, how do we get that money out of the company? And how do we really efficiently take this income out? And the great thing about limited companies is that there's 3 different principal ways in which you can actually take your money out from your company. So obviously, if we own in personal ownership, everything's taxed at income tax, and so you don't need to worry about taking it out. When you use a company, there are 3 principal reasons that we structure our, three principal ways in which you can extract your funds from the company via the companies we set up. The first is via dividends. Now, dividends you can pay from your company, except the issue in the UK is dividend tax rates can be quite high. What you do get, however, is you get a dividend tax-free allowance. So what you and other shareholders can do is you can take out profits from your company, dividend tax-free, up to a certain point. And so that can be done across all the shareholders. So each shareholder will have their own dividend tax-free allowance. And that's a very efficient way of extracting your money. If you're based overseas, it's an even more beneficial way. The reason for this is that dividends leaving the UK are not subject to dividend tax. So there's a 0% dividend tax on dividends leaving the UK on the UK side. And so if you're based, for example, in the Far East or the Middle East, it can be a very, very efficient way of actually extracting your profits. Beyond using dividends, you also have the option to do what's called an owner loan repayment. Now, an owner loan repayment is very simple. And what we do for all our companies we set up is we set up a legal document called the director's loan note. The director's loan note basically says, I, Liam, am lending my company the money to purchase this property. Therefore, my company owes me that money back. And so what you can do is you can repay that money back to yourself from rental profits without any tax on those repayments. So it's a very efficient way of actually extracting your rental profits once they're in there. And so what you could potentially do is if you're based in the UK, is use up your dividend tax-free allowance and then extract the rest of your profits via owner loan repayments. Now, the third option you have here, and arguably one of the most lucrative, depending on what you want to do, is as a director of your company, you can make pension contributions. And the great thing about pension contributions is pension contributions are made pre-tax. So let's say in a year you have £10,000 of rental profit in your company. Now, before you pay tax, you can pay that £10,000 out into your pension pot. And the company, therefore, has actually not made a profit that year, and so it's not subject to corporation tax. So it's essentially a very, very efficient way of mitigating tax on your rental income across the year. And I'll show you a couple of slides after this detailing an actual investment scenario here. And so they satisfy the benefits that when you actually own the property. However, there's a number of benefits that are often not spoken about on the sale of the property when you use a limited company. And this comes from the fact that when you use a limited company structure, you actually increase your means by which you can sell. So you have the option of selling the property from the company, as you normally would, or you have the option of selling the property via way of the company's shares. Now, when you sell the property via way of the company's shares, it's a very lucrative way of doing so. And the most simple way to view this is you're still selling the property, except it has this wrapper around it, and that wrapper is the company's shares. Now, when you sell the property via way of the company's shares, you elicit two benefits. The first is that the buyer doesn't pay stamp duty land tax on the purchase of those shares. So what that gives you is a price advantage as the seller. So let's say in a scenario, a buyer would have typically paid £20,000 in stamp duty to purchase the property in question. Now they're not paying that. So what you can essentially do is increase the price of your property by, say, £10,000. And the buyer would still be happy to purchase that property because they're still making a significant saving relative to what they would have paid for the property anyway with stamp duty. So in that situation, the buyer's making a saving and you as the seller are increasing your capital gain. The secondary element of that is that you pay substantially less capital gains tax on the sale of shares than you do on the sale of property. So even though technically speaking, you are selling the property from the company, legally speaking, you're selling the shares. And as such, you're paying a lower rate of capital gains tax than you would do if you were selling the property outright. And so in an investment scenario where you're exiting the investment by selling the property via way of its shares, you're basically increasing your capital gain and decreasing the tax applicable to that gain. So it's a very financially lucrative way of actually exiting the investment. And so what I've got on the next slide is a little post-tax investment example. So this is related purely to rental income. So this isn't across the whole of the investment scenario. So it doesn't include kind of sale and any capital gains, etc. This is purely looking at the rental income. And so we've made some assumptions here. So we're going to take a property purchase price of around £200,000. We're going to have £150,000 mortgage on this. So a mortgage LTV of 75%. Now it's important to be fair and understand that currently, mortgage interest rates for personal name mortgages are slightly lower than they would be for limited companies. However, this is changing over time and that gap is getting smaller and smaller. And that's why they're reflected differently here. So at 3% here for limited company and 2.6% for personal name. A gross rental yield of approximately 16%. Total property running costs of about 15% of gross rent. Number of years of assumed ownership, about 10 years. And an income tax rate. So we're using a higher rate taxpayer here at 40%. So let's take a look at what this would actually look like when comparing company ownership with your personal ownership. So taking those assumptions of a 6% yield, we have about £1,000 a month rental income here. So £12,000 across the year. Now, obviously, with the limited company route, there are a number of services required to actually run a limited company. So you need accountants and registered office and secretarial services and bank accounts, a number of other services. Now, as I said at the start, GetGround provides these all under one roof, and we do so very cost effectively for £288 a year. So £24 a month when you include the VAT and £20 without. I'll develop that in a further slide. So that's just what this company management fee entails here. Then we have our running costs here at £1,800 in both. And then this is our rental profit before mortgage interest listed here. Then we apply our mortgage interest deductions. So obviously in personal ownership, because the rate is slightly lower, there's a slightly lower amount in mortgage interest due, whereas slightly higher in limited company. And that leaves our annual profit before tax is $6,300 and $5,412 respectively. Now, because we own in our personal capacity here, we're taxed at income tax here, whereas in company ownership, we are not. There's no corporation tax when in personal ownership, but corporation tax, because it's significantly lower than income tax in this case, is this figure here, £1,028. So even though here, when we look at the annual profit before tax, it looks more beneficial in your personal capacity. When we get into the taxation side of things, we actually come out significantly better off in company ownership here. So almost £1,400 better off. And then if we look at the course of a 10-year period in terms of what that difference actually is, it's extremely measurable. So about £14,000 worth of post-tax difference between company ownership and personal ownership. Now, as I said before, one of the most lucrative ways of actually extracting your money from the property, or most efficient even, is via making pension contributions. Now, if we take those assumptions again in that exact same scenario again, let's see what happens when we actually add pension contributions into the mix. So we've got our same rental yield, same figures all the way down here, and then we get to our annual profit before tax. Now, what we're going to do here is in our limited company capacity, we're going to pay our profit here into our pension pot. And so our actual pre-tax profit in the company is zero, whereas in personal capacity, that remains at 6,300. And so income tax is applied for personal ownership, but here there's zero corporation tax on the company, as the company hasn't actually turned a profit, because this profit has been paid out as a pension contribution prior to. So your actual annual profit in terms of what's now in your pension pot is 5,412 versus 3,000 in your personal capacity. And as you can see here at the bottom, that has increased by an extra close to £10,000 compared to the previous slide and the previous example. So it's a very, very efficient way of actually extracting your profits from the company. Now, those slides address the tax efficiencies, and the tax efficiencies are very significant, as we can see here. However, as I said before, we're very keen to take a very holistic view, and something that we've put a lot of effort and resource into is to making sure we maximize the value of limited companies and allow clients to understand how extensive the benefits can be and allow access to those benefits as well. And so, as I mentioned previously, limited personal liability is one of the historic reasons people have been keen to use limited company structures. And this comes from the fact that when you use a limited company, your personal assets and your company assets are separated. And so should something go wrong with one of your investments or one of your property investments, say you default on a mortgage or a tenant sues you or something like that, the company is liable and you're much better protected in terms of your personal assets than you would be if you owned in your personal ownership. So let's say your house, your car, and other assets like that, which would usually be essentially fair game for banks to come after in your personal capacity, are much more difficult to come after when you own your real estate investments in a limited company structure. Beyond that, it's also very easy to buy and sell with others. So if we look at JVs or partnerships of any kind like that, you can bring investors together in a very safe legal structure that protects all investors and allows the investors to get what they're deserving of, essentially. So let's say you want to do a flip and there's three of you doing the flip and you want to make sure you're all kind of covered from a legal perspective. You could all become shareholders in a company and purchase the asset together and develop the assets and then sell it on eventually. And you would all get your just deserves, essentially. You can also bring friends and family together, and we allow up to 8 to 10 shareholders in our companies to actually purchase. So you can pool capital, buy bigger properties, buy more properties, whatever it might be. And you also have increased means to actually sell on exit. So like I said before, you can either sell the property from the company or you can sell the property by selling the company shares. Beyond that, there's also some very important inheritance tax and estate planning elements to using limited companies. So one of the very beneficial aspects of using a limited company is that you can essentially transfer your property assets via way of transferring shares to your children very efficiently. And so what you can do is you can essentially gift shares across to your children in a way that, as long as you survive for 7 years past those gifts, inheritance tax shouldn't apply to those transfers. And what it allows you to do is basically separate economics and control. So the economic value of the actual investments and the control of it. So you as the company director and a minimal shareholder can maintain control of the company and what it does, etc. But you can pass on the shares to the children so that they own the economic value of the property and it doesn't become part of your estate after that 7-year period. And so that inheritance tax is mitigated. Beyond that, there's also some very well-developed mortgage markets out there now as well. So I'll elaborate on these in this next slide. And so the mortgage market for limited companies is a bit misunderstood from what I've seen when I speak to clients. And this essentially comes from a few misconceptions that financing is extremely hard to get for it, that there aren't many lenders for it, rates are extremely high, and that overall that the financing picture just isn't a great one for limited companies. That simply isn't the case. So There are a significant number of lenders out there who have limited company products, and these are increasing pretty much by the month. You can see a number of the actual lenders over here. And in 2019, close to 80% of buy-to-let applications were actually made in limited company name, to give you an idea of how many people are doing it and just how many options there actually are out there. Now, admittedly, the interest rates are slightly higher in limited company capacity than they would be in your personal capacity. But as time goes on, these are actually decreasing further and further. And we're now seeing interest rates as low as 2.7% and LTVs of up to 80%. Now, coronavirus has really played around with the market pretty negatively the last year or so. And so lots of lenders have pulled out. It's created a bottleneck for people applying for mortgages. So it means those who actually are stale in the market can basically increase their interest rates because there's a very high demand for it. But essentially, as we come out of COVID and things get back to how they were previously, those rates will continue to fall even further. And so the financing options are very much there. We have a panel of about 10 different mortgage brokerages that we work with and assist our clients with using. And we've got access to about 300 to 400 different limited company mortgage products in there. Now, another of the benefits of actually using a limited company is actually when you come for the actual mortgage application, lenders tend to have lower income requirements for company versus personal ownership. And this is very useful, especially for those who are potentially retired and looking to get mortgages, or those who are on low incomes. Beyond that, lenders also tend to have lower rental stress tests for company ownership versus personal ownership, which is another appealing factor behind limited company mortgages. So if we've discussed all these benefits, then why hasn't everybody been using these limited companies, and why is there still a debate around this? And I think there's three categories to put this in. And I think the first is understanding. So I suppose that's why many of you are here today, to understand exactly what's going on, what a limited company is, how it can be used, where the benefits lie. But people are unaware of what the advantages are. They're also unaware of how to actually access those advantages, how to structure things correctly so that you can actually reveal these advantages and these benefits and access them. And then there's a lot of misconceptions, again, a belief that the mortgage market is very small with extremely high interest rates, that it's only applicable for those with 10 properties or those with, a portfolio, or those who earn, very, very high incomes. And the information that's out there is actually quite complex and difficult to understand. So, the minute you start speaking about tax and structuring, it can scare a lot of people, essentially. There's a lot of jargon in there. It's quite difficult to actually get to grips with what you're actually dealing with. Beyond that, there's the hassle and complexity elements of taking a limited company on. So the actual company formation, the structuring, getting it right, legal document creation, setting up bank accounts, doing KYC and anti-money laundering checks with a whole host of suppliers. Can be a real hassle, and it puts some people off. It's not as simple as just going to company's house. Like, you can by all means go to company's house and set up a company, but when you do that, you essentially have a shell. A company's quality and what it can do is determined by the legal structure that goes on in there, and that's something we at GetGround have put an awful lot of time and resource into with CMS law to make sure that companies we create are specifically built for limited company buy-to-let purposes, so specifically for property investments, and are designed so that you can extract every bit of value from that company as possible. And then there's also the ongoing management of the company, so with accountants, with lawyers, with secretarial service, and that's another thing that puts people off. And in line with the ongoing management is the cost of the management. And this is one of the reasons people often think for maybe 1 or 2 or 3 properties, it's not worth taking the limited company route, because the reality is it can be very, very expensive to take that route. So you require, accountants, secretarial services, bank accounts, legal document subscriptions, and other services. And a typical yearly cost in the UK of running a limited company with sort of high quality services is around £1,800 plus. And obviously that price will increase the more properties brought into that company. And so if we take that scenario that we had before and we change the company running costs, our actual post-tax profit is really quite negligible compared to personal ownership when we incorporate this. And this is one of the reasons why a lot of people think for 1 or 2 properties, it might not be worth it. So this is where we come in as GetGround. So how can we actually help here? So what we're trying to do is make limited company ownership very, very simple, very, very cost effective, and very, very hassle-free. So taking away those 3 issues before that were preventing people from taking the limited company route, and making them cost effective, hassle-free, and very understandable, and making information very palatable. So again, just a summary of kind of what we do exactly here. So we help assist in educating investors. So we do lots of webinars, things with the NRLA, things with various property forums. And then we also have regular one-on-one consultations with clients. Please don't hesitate to arrange one after. There's, I believe there's a box at the bottom of your screen that should allow you to submit both questions and arrange a meeting with me or another one of our consultants over the next few days. And then our actual service provisions, we take on all the legwork. So we set up and structure your limited company for you, as per your requirements. We provide the company bank account, take away the stress of going off and actually setting up a bank account. And then we do everything required to manage your company. So we look after all the financial administration of your company, so the accountancy, the tax filing, bookkeeping, everything else like that. And so everything's in one roof, in one place, on one platform, and can be accessed from anywhere in the world very, very quickly and easily. And beyond that, we also have our property partners, especially in financing. So we can assist in finding financing options for your limited companies, especially at very appealing interest rates and LTVs. Now, the reason we've kind of come into existence is to create a very efficient platform to be able to do this. So the property industry, it can be quite antiquated in some ways, and it can be quite slow, and it can be very costly because of this. So if we take that figure before of the typical cost of running a limited company in the UK, you're looking at about £1,800 a year. GetGround does this for £20 a month. So we look after all your financial administration of your company, your entire company management detailed here, very efficiently through the GetGround platform. It only takes you about 20 minutes to actually get set up on the platform. Again, you can do that from anywhere in the world, from the comfort of your own living room, and for a very cost-effective price. So essentially, you can run your entire limited company for £240 a year through GetGround. This is just a little slide here that details exactly what that service provision is. So the actual creation and structuring of the UK limited company, so the incorporation of a private limited company at Companies House, structuring the company as per your actual design. So we allow you to actually design your company as you wish through your platform. Then we create the likes of your legal documents, so the likes of director and owner loan notes, shareholders agreements, and the articles of association, everything else required for that. Then we open the financial account for your company, and this applies to both UK and international investors. For international investors, it can be very hard to get one of these, and is a requirement for any mortgage in the UK. And they're compatible with all mortgage providers in the UK. It's something we've made a lot of efforts to ensure they are. They come with a UK sort code and account number. And so for rental income and property expenses, they're IBAN enabled for international transfer. And we now have our own currency exchange services built into the accounts as well. So if you're purchasing in the UK or you need to do up your property, you can transfer in that way very cost effectively. And you can also pay yourself dividends and international transfers back to yourself. In terms of ongoing management, we do all the accountancy. We do annual year-end company accounts, which are prepared and filed, company tax returns, company secretarial services, and we act as the company registered office and process agent. And then beyond that, we've also got access to our mortgage brokerage panel for you. So over 300 products and about 27 different lenders. Interest rates again as low as 2.7% and LTVs up to 80%. And we can arrange financing for pretty much anyone. So we've got around 2,500 clients around the world currently on the platform. And they're based everywhere from the UK to Africa to the Far East to everywhere else. And there are very few locations where we can't arrange some form of financing option for a client. And that can be first-time investors, expats, non-UK nationals. There's a whole host of options out there. So if you are interested in that, please don't hesitate to get in touch. And the thing that we're also very proud about doing is that we've spent an awful lot of time and resource on ensuring the companies we create are specifically designed for buy-to-let property. So I mentioned earlier on that it's a bit of a misconception that you can just jump on Companies House and set up a company. You can very, very easily, and you can access a couple of benefits through that. But if you truly want to squeeze every little bit of value from your limited company, it's very important to structure things right from the start. Everything needs to be done correctly from the start. And that's what we do essentially for you. So we've leveraged some global leading tax and regulatory and legal advice from the likes of CMS Law, who are also the lawyers to HMRC, to ensure that the companies we create are as valuable, as specifically designed for buy-to-let purposes as they can be. And that allows access to these tax efficiencies here that we discussed earlier. So we want to maximize all the tax efficiencies and other benefits associated with limited company ownership. And that is what we have structured there. Now, I realize I'm running slightly low on time here. So I think it's time for some questions at the bottom. If you have any other questions, or if you'd like a consultation, I've also left my contact details here. All consultations are free, so we're very much happy to talk you through your own situation, understand how I might be able to assist, and take you through a bit more of a thorough understanding of the limited company buy-to-let route. But if there are any questions now, please don't hesitate to submit them. And thank you very much for listening.